All right, let's talk about if you are someone with a small account size of just $500, how you can flip that into $10,000 in a matter of just a few months using a simple scalping strategy, trading the micro futures. Okay, yes, the micro futures. Okay, we're not talking about the e-minis, and you're probably saying, wow. I stress to all beginners out there, and if you're someone that's new, that's been doing your research on the internet and wanting to trade the future markets, I would definitely start with the micro futures if you're limited with capital or funding at this current moment. All right. So let's say you have $500 put to the side and you want to kind of start, dabbling into the future markets. Now, I wouldn't say just start off right now. You need to understand and learn the, simple concepts that surrounding the, yourself to help educate yourself in regards to the future markets. And those concepts that I'm talking about, number one that's very critical and important is structure of the market, understanding which way, to trade, either to the up direction or to the down direction, because the market can only move basically three ways, up, down, or sideways. And you don't want to be trading in a range in a sideways market if you're not a more experienced trader. So as a beginner trader, you can become profitable with just $500. I know a lot of people probably would say you can't. You can definitely do so, but trading the micro futures. When I first started, that wasn't an option, but now there's opportunity to be able to do so. So like with the Nasdaq futures, trading the micros, okay, the micro Nasdaq, the MNQ, you could trade. It's $100 per contract to be able to. That's the margin to be able to trade the micro futures. Like the ES is $50. Or no, some brokers is $40. Okay, my broker is $40 per contract. So with $500, you could trade up to 5 contracts, and we're going to do some simple math here to show you how things kind of take a snowball effect and start rolling after really moving into month 3 and 4. So about month 4, you should be close to that $10,000 mark, or maybe about 4.5 months in, or it just really all depends on how many points or ticks you end up scalping, or in total, month to month to month. Now, I'm going to go with just a basic 1-to-1 type situation or scenario, and I'm going to show you the strategy, how you can go about doing this. Okay, it's one that I talk about, one that I personally trade, one that I share over our Discord community. And if you're interested in joining, the link is down in the description portion of the video to anyone that is, again, interested. You'll also see another link down below, which I'll cover that towards the latter part of the video, for anyone that's really wanting to drive home and dig deep and in depth into the strategy itself surrounding the trade breakdowns, so you can back test yourself and forward test it yourself. But it's where I share my trade breakdowns, trades that I post over in the Discord. I go back and I break them down in great detail. It's like, you're sitting right next to me or virtually, and I'm kind of walking you through my mindset in the step-by-step process. But I'm going to talk about the becoming an elite member for those that are interested in everything that you receive that can definitely help you and put you in the right direction. And we have we have successful people that are part of the elite membership program that are very profitable and doing well themselves, or those that are on their way, and they can share their own story with you. You can come over to the Discord and ask them, and they'll tell you that it's tremendously has helped them out and has cleared a lot of their airwaves and clear things out for them as far as being able to clearly be able to trade, and because basically what you're doing is looking for confluence and confirmation behind the strategy. So we'll talk about that, but let's do the simple math right quick. Let's say you have $500, right? And you hear me talk about often, unless you're a first-time viewer here on the channel, about the 5% rule. Basically risking or leveraging 5% of your account. You must know and have some type of risk management parameter set, so you could follow as far as your trading plan. So 5%, 6% max. Okay, so if you have $500, 5% of that's only $25. Okay, and $25 means that you can trade, if you break it down, 12.5 points, which is basically, look at the little math notes I have here, it's 56. Okay, so it's basically 12.5 times 4. Okay, that's going to give you 56. That's going to be the stop loss on that you can trade with based on a $25 5% risk management, rule. Okay, so basically, yes, it's not a lot. So if you're going for 1-to-1, you're looking to go risk $25 to make $25. Now we were talking about with just $500 now. Okay, this really starts a snowball effect, and you're probably saying, well, that's not a lot of money, $25 on a day. No, it's not. But you shouldn't be so much focused in on how much you can make on a day. You should be focused in on compounding your account. So in the long run, you can start to make larger amounts of sum of money. Okay. All right. Like me, for example, I'm not looking to make $10,000 a day. Is it possible? Yes. But the thing about life is being consistent with what you can make. All right. And I trade with the same number of contracts each and every day, the same number I've been trading with for 4 years. So it's a matter of eliminating the greed and being consistent, because consistency is what leads to profitability. So with $500, you should only be in compounding mode. Okay. And this is what I'm sharing with you today based on a 5% rule, how you can turn that into $10,000 in a matter of just a few months, to where then now you can start making more money. So have that goal, especially if you're working a full-time job right now. Stick with it, see it through, trade the micro so you can build up your small account. All right. You don't have to go start dumping a bunch of money of your own personal income or revenue streams into your brokerage account, unless you have the capital you want to do that. You can actually take a small amount and build it that way. So with $500, again, like I said, $25 risk, looking for a risk to reward of $25. Okay. Meaning risking $25 to make $25. That means 12.5 point stop, which is 50 ticks, to make 12.5 points or 50 ticks. Okay, if you only do 12.5 points a day, that's going to be $25 a day. If you do say 25 points on the day, okay, then that's going to be going to give you $50 on a day. Okay, so you can capitalize that way and compound that way. But a 1-to-1 at $25, let's do the math. Okay, so we do 25 times 5. All right, it's not much, times 4. Okay, that's $500. So you started with $500, right? And now at the end of the month, if you're able to make $25 on the day, that's going to give you $500 at the end of the month. So at the end of the month, now you're taking that $500 and now you've made what? You have a total of $1,000. So the next month you start with $1,000, and then you use the same rule, the 5% rule. So if we do $1,000 times 5%, what does that give you? $50 that you can actually trade with, risk to reward. Okay, so basically what you're doing for every month, you're doubling the contract size. For month 1, we traded with 1 contract. Month 2, now we can trade with 2 contracts, and you'll see in month 3, you're doubling that, and then you can trade with 4 contracts. So we're in the month 2 now. All right, so now we have a goal of making $50 a day. Everything stays the same, doing the 1-to-1. Okay, same thing. All right, having 12.5 point stop, 50 tick stop. And looking to make 12.5 points to make that $50 on a day. Times 5, okay? Times 4 weeks, that's $1,000. So now, last month, we were able to carry into the second month $1,000. And now at the end of the second month, now we have $1,000 just basically in the second month making $50 a day. Now, month 3, it going into 4 is where things start to roll for you, okay? So now you have a total of $2,000, and just, a month, 2 months prior to that, say not really even 2 months, excuse me, you started with $500, okay? Now you have $2,000, okay? Moving into month 3, okay? So now it's $2,000 times 5%. Now we have $100 risk to reward, meaning we're looking to risk $100, okay? Keeping the same rule, 1-to-1, 12.5 point stop, which is basically 50 ticks, and looking to make $100, 1-to-1, okay? All right, so if we do that times 5 times 4 weeks in a month, all right, basically it's like 4.3, that's $2,000. So now in month 3, you made $2,000. So in total now, you can carry over $4,000 going into month 4, all right? And then it really starts to grow from there. Each month, again, you're doubling up on your contract size. So the first month, 1 contract. Second month, 2 contracts. Third month, 4 contracts. Going into the 4th month, then you trade with 8 contracts. And as you continue to do that using the 5% rule, you're looking to have a larger risk to reward. Okay, so let's say now we have $4,000. We're moving into the 4th month times 4,000 times 5%. Okay, $200 risk, same parameter, 1-to-1, 12.5 point stop. And then we're going to go 200 times 5 days in a week times 4, roughly 4.3, $4,000. Now we have a total of $8,000 at the end of month 4. Okay, so it could be actually a little bit more than that, depending on if you stuck with and just made 12.5 points, 50 ticks every single day, or if you went for a higher risk to reward. So let's say instead of going for 1-to-1, you went for a 2-to-1. So instead of going for $200 In month 4, you're risking 200 to make 400, those type things. Or in month 3, you're looking to risk 100 to make 200. Or month 2, risking $50 to make $100. So that depends on what your risk to reward is. But if you stick with that 1-to-1, you'll see basically coming out of month 4, you're close to almost $10,000, where you started at just 4 months prior to at $500. It's definitely doable trading the micros. Now let's talk about the strategy right quick, because it's very simple. It's not complex at all. All you're doing is using top-down analysis, but you got to get the market direction correct. All right. So let's take a look at this example right here, because this was an actual supply zone. You should be able to look at this chart and just be able to determine which way the market is moving right. You can see the bearish movement. You can see the market's breaking structure, making lows, lower highs, and lower lows. Each time it makes a run to the downside, as you see here. Okay, we're in a channel. So when the market pulls back to key areas of, say, of supply, then I'll be looking for areas to take shorts from. Now, I primarily am looking for an area where there's a break of structure at. All right, like right here. This is a break of structure to the downside below these lows right here. It made a low, lower high, came down, broke this area structure. So there's a swing right here with a break of structure below these lows here. And now you have a beautiful area of supply right here. So this is roughly about 8:34 on yesterday morning, Friday. Let's take a look at that right quick. Now, the key to it is to mark up your higher time frame chart first. Right here, this is a supply zone right here. Aggressive selling. We have an imbalance. That's the most critical part to this, because the imbalance or gap is going to let me know, is this a low probability versus a high probability setup? This is a high probability setup because we have an imbalance. Again, I said this before. If you're not sure what I'm talking about when I say imbalance or gap, go to the homepage and use the search tool. Click on it, type in imbalance or gaps, and a couple videos will populate discussing what I talk about in specific about imbalances or gaps, so that you understand that. So here we go. We mark up the higher time frame chart first, the 120. Now, I'm not trading time-based charts. I trade range-based charts. People always ask, let me go ahead and say it for the millionth time, because it's just cleaner to the eye to me. I like the movement of it. I can see where momentum is really, well, volume is really coming to the market, just cleaner to the eye. All right. If you trade time charts or time-based charts, tick charts, volume, whatever it works for you, stick with that. Now, once I have my higher time frame chart marked up, all I'm doing is moving down to the lower time frame. Why am I doing that? It's basically a zone within a zone approach. I'm marking up the higher time frame first, then I'm scaling down to my lower time frame chart to get into or find a more precise entry point, but still a supply zone, one that's resting on the inside of the higher base or higher time frame chart. So at this point, I would be looking for a retracement back to this zone. I'll scale down. I'll move down to my lower time frame 24 range. We'll do that right now. So here it is as the market's retracing back. I'm looking for a 24 range supply zone resting on the inside of a larger 120 range. Okay, 120 range chart supply zone. As we see it, as it approaches the zone, we're looking to the left to see, are there any areas of supply? Yeah, right here. Okay, but as you can see, the market broke right through that area to the upside. Okay, all right. And if the market, so let's say this was a valid supply zone right here, and the market basically mark it up on my lower time frame chart. If the market closes like inside that zone, all right, deep inside that zone, I'm not interested. Okay, I want to see clean zones where the market wicks away from a zone. So let's take a look. As the market continues pushing higher, it breaks through this area here, pushes up, still nothing to the left. Here's a valid supply zone right here. Okay, I'll blow it up a little bit so you can see it. Right here, valid supply zone, okay, where the market broke lower. So I would mark that up. Let's go ahead and do that right here on my 24 range chart. I'm going to mark this in yellow because that's what I mark my 24 range supply and demand zones with inside of the larger zone. All right, so I'll click that. Okay. Now we have the 24 range supply zone resting on the inside of our larger zone. What's the purpose of that? To give us confluence to find a more precise entry point. So we tap into the 120 range. We find a supply zone on the 24 range. That's a high probability just as well with a gap or imbalance attached to it back at the zone. And then from there, it's just a matter of looking for rejection to go short, right? All right, I'm either going in, there's two ways you can go in. Aggressive at the first candle close, or you can wait for a break of candle to the downside. So meaning a break and close below this last up bullish candle right here. So I'm getting in here at 21,365. You can wait for the break and close at 359 and go short. Okay, what are you aiming for? Gaps to be filled back to the downside, most likely. But if you look back over at your higher time frame, here you got to pay attention to structure as in price action as the market was approaching the higher time frame zone. Look at the higher time frame. You have gaps to fill here, or let's see, gaps to fill right here, back down to a demand zone resting right below. So I would take this trade right back down to the demand zone. So if I got into the trade right here at 364 or 359, whether you're aggressive or conservative, I would take the trade back down here to roughly 315. Okay, so that's a nice trade. Definitely picking yourself up those 12.5 points very easy, plus some, maybe 20, 30 points right there if you're able to hold it through. How do you hold it through? Okay, I always talk about this. The moment you take the trade and the market starts to make lows, lower highs, and breaks to the downside, basically breaking structure on a swing, we have a low, lower high, and a new low. Move your stop from where it would be at the point of rejection above this area here, back down to the next lower high. Each time it breaks structure again to the downside where it makes a new low and a new lower high, bring it from here down here. This is how you can trail behind price. Let's say you close out most or majority of your contracts out at 12.5 points, then just allow the last contract to trail with price and move it down each time that the market makes a new lower high. That's how I trade that each and every day, using multi-chart confluence. Mark up the higher time frame, look for a lower time frame zone on the inside of the higher time frame. I'm going to show you one more example right quick. We're talking about a demand zone. People probably say, well, you just showed a supply zone, but can you show us an example of a demand zone? Sure. All right, so if we're bullish to the upside here, we were bearish, but now we're breaking structure back. There was a reversal that happened down here. We're making lows, lower highs, breaking structure to the upside, and then the market pulls back. We have a valid demand zone on our 120 range chart. Now, you could use multiple charts. You could scroll down from like a 120 to a 60 to a 12, to a 24 range, and look for opportunities. But there's a valid 120 demand zone where there's a imbalance or gap resting back at the zone right here. So we mark up the higher time frame first. We're bullish. We're only looking for demand zones setups on our higher time frame. Mark it up. Then if we go down to like the 60 range, yeah, we can see we also have a 60 range demand zone resting right here. More confluence, right? So far we got two charts with confluence, the 120, the red box is the 60 range demand zone, and then we'll move down to a 24 range, okay, chart, right? More confluence here. Now, the only thing is here, as you can see, when the market pulled back, there's no 24 range demand zone on the inside of the 120 and the 60. So what I'll do typically if I'm looking to scale down all the way to the 24 range and look for opportunity where there is no demand zone on the inside of the larger or higher time frame zones, then I'll wait for the market to start moving back in the direction with the higher time frame, because as you can see on the 24 we start to have a bearish descent to the downside. So I'll look for the market to do what? Highs, higher lows, break structure to the upside, as you can see here, okay, and then pull back to a key area of demand on the lower time frame 24 range. But still, as you can see, when it started breaking structure, putting us back into bullish movement with the higher time frame, it still pulled back into our zones here, the 120, 60, and the 24 right here. So this is a valid demand zone to go long off of. Again, we're looking for either the breaking, well, look for the rejection. The first candle close, you can go long here at 463 or wait for more of a break and close. The market does pull back. I tell people all the time, do not put your stop tick to tick at the back end when you take the rejection or enter the trade right here. Give yourself at least 3 to 4 points breathing room wherever the rejection takes place at. So if you enter the trade here aggressive at 21,463, I'll blow this up a little bit, 463 on the first candle close, and not more of a conservative route here at 469. Either way, this is the rejection point at the 24 range demand zone. The stop is going to go in the back end here at 457. Give yourself 3 or 4 points room. Maybe bring it on down to 454, 453, somewhere in that area there. And as you see, the market when it came back, it never would have stopped you out. Give yourself like 1 point, 2 points. Stop. That's not enough, okay? Because they are going to check that area and you can become liquidity real quick and they'll take you out. So either way, the market comes back, you don't get stopped out, it runs to the upside. And that's how I trade each and every day. Now, if you want these trade breakdowns to where, there's tons of these videos. It's where I post my trades over on the Discord community. I'll take a screenshot, post them like everyone else does. And if you're interested in joining the Discord, it's free. The link is down in the description portion of the video. But if you want the trade breakdowns, the video playlist, the live recorded trading sessions where I'm recording my trading sessions and you can see me making these entries or taking these trades, and I'm also walking through my mindset of what I'm looking at the time that I'm basically reading the market out loud to you. Okay, looking at structure, which way should we be trading? Am I going to trade right now? If the market is ranging or moving sideways, you'll see me engaging in the market, basically talking to you within this video content and taking trades. So again, you will see the trade breakdown videos, which there are tons of them already. The video playlist, the market structure video, that's where I made an instruction-based video that can help you understand, especially if you're struggling with market structure. Also, the live recorded trading sessions and the market recap videos. You can be definitely join that by becoming an ultra elite supporter down below if you join that link or click that link. I'm sorry. But anyways, you can also just become an elite member if you choose to. So there's a difference there. With the elite membership, you just receive the trade breakdown videos, the video playlist, and the market structure video. If you want to become an ultra elite supporter, then that's when you include everything and all the perks. Okay. The trade breakdown video playlist, the market structure video, live recorded trading sessions, and the market recap video. So there's tiers. So when you click that link, there'll be multiple tiers that pop up. You choose which one of the elite tiers you would like to choose from. It lists out the perks and rewards you receive for each tier. But if you want everything inclusive, make sure to choose the ultra elite supporter tier. Outside of that, guys, that's it. If you haven't already clicked on the sub button, the subscribe button, go ahead and take the time to do that, and make sure to turn your post notifications on by clicking the bell. If you haven't clicked the like button yet, okay, please do me the biggest favor. It helps the channel out because it helps push out the video content to where it needs to go, and put it in front of people who are looking for video content just like this. So please, not only do me a favor, but do others a favor just as well by clicking that like button, the thumbs up button. I greatly appreciate it. But that's it. It is Saturday. I'll see everyone over on the Discord starting Monday morning, and I hope everyone has a fabulous weekend. Take care. Goodbye.